बिस्मिल्लाहिर्रहमानिर्रहीम। अगर आपको याद हो लास्ट टाइम हमने जॉब ऑर्डर कॉस्टिंग डिस्कस किया था और आज जो है हम प्रोसेस कॉस्टिंग को डिस्कस करेंगे। प्रोसेस कॉस्टिंग में जैसे मैंने एक्सप्लेन किया था लास्ट टाइम कि इसमें प्रोडक्शन जो है एक डिपार्टमेंट से दूसरे और दूसरे से तीसरे, तीसरे से चौथे डिपार्टमेंट में ट्रांसफ़र होती है और फाइनली वो एक फाइनल फिनिश गुड्स में चली जाती है। इट डिपेंड के किसी भी इंडस्ट्री में प्रोसेसेस कितने हैं। देर आर सर्टन डिपार्टमेंट जहाँ 3 ही प्रोसेस में काम कंप्लीट हो जाता है, कहीं पर 4 में होता है, कहीं पर 5 में होता है। और आपको मैं बताऊं कि ये जो सिंपल एक टैबलेट्स आपके हाथ में पेनाडोल की आती है, ये तकरीबन 18 प्रोसेस से गुजर कर जो है ना वो बनती है। हालांकि छोटी सी चीज़ है लेकिन इसमें 18 प्रोसेस लगते हैं। तो मैं आपको एक एग्जांपल समझाता हूँ कि किस तरह से प्रोसेस अकाउंटिंग में हम कॉस्टिंग कैसे करते हैं, कैसे हम मैनेजमेंट को इंफॉर्मेशन प्रोवाइड करते हैं कि किस प्रोसेस में कितनी कॉस्टिंग कर हुई है। तो दिस इलिस्ट्रेशन इज़ फॉर यू that a chemical company processes a range of products and including one of them is the detergent, which passes through 3 processes before completion and transfer to the finished goods storeroom. And during a certain month, they have incurred this cost in those 3 processes. Process 1, process 2 and process 3, we got the basic raw material of 10,000 units of basic raw material in process 1 and 6,000 in total. Then in direct material we added for each of these 3 departments. In 1 it is 8,500, it is 2 9,500, it is 3 5,500, total is 23,500. Now direct wages 4,000 department 1, 6,000 department 2 and 12,000 in department 3. Then there are certain direct expenses. Now these direct expenses are also essential for the production continuing, because direct expenses are directly engaged, are directly brought into the process, and they are 1,200 in case of department 1 and 930 in department 2 and 1,340 in department 3. Total is 3,470. Maybe this is an extra machine you engage for the process of in these 3 processes, or maybe a certain individual is engaged for these 3 processes. So the cost of that individual which is brought from outside, and these are the direct expenses. Now production overheads is given in total, that is 16,500. Now here again the problem is how these 16,500 will be allocated to each of these 3 processes. Now let me show you output of these 3 processes. That was the cost of process 1, 2, 3 and total, and now the input and output from process 1, 2, 3 and finally finished goods. Now how many units we have started? 10,000, but the output in process 1 is 9,200. So you can see there is a gap of 800. We have to find out what is that gap about. Similarly, we got process 2. So do remember, from process 1 you have output of 9,200 which goes to process 2. 9,200 से अब जो प्रोसेस शुरू करेगा नंबर 2, उसकी आउटपुट आ रही है 8,700. अगेन देयर इज अ गैप ऑफ 500. सिमिलरली the output of process 2 of 8,700 goes to process 3, and there the output is 7,900. Again you can see there is a gap of about 800 units. So these are the differences, and they are the basically losses which we have to account for, what type of losses they are. Now he said clearly the normal loss in process is 10% in process 1, 5% in process 2 and 10% in process 3. So these are the normal losses. Normal losses are basically unavoidable, they are customary, and you cannot avoid them at all. They are usual, and they happen. It happen in any, let's say, process industry. Losses are always there, which are normal, which are uncontrollable. Now if you look at it, these losses which are normal, they can be having some residual value, some sale value. In this particular case, the normal loss which result from process 1 can be sold for 20 paisa a unit, and in process 2 it can be sold 50 paisa a unit, and in case of 3 it can sell at ₹1 per unit. There were no stock at the start end of the process. Do remember here, first of all, we are not talking about that there is any work in process. because when we go to the work in process stage, it is a bit complicated calculations. But let's finish first of all that what is a process account, how the process accounts are prepared. So look here, the requirement is clear. Process 1 to be prepared, process 2 and process 3. And then finally, you have to see whether there is abnormal loss or whether there is a normal loss. So how much is normal loss and how much is abnormal loss? So if you look at the process 1, in case of a process method, ledger accounts is not usual. It's slightly different. For example, on the debit side, you have 3 columns, the quantity column, the unit column, and the unit cost column, and then the total cost column. Similarly, on the output side, you got the unit, and then you got the unit cost, and you got the total cost. Now, in process 1, we have added basic raw material of 6,000, which comes to, say, 10,000 units, so 60 paisa a unit. Then in material, we added basic material, we additionally added 8,500, direct wages, similarly direct expense, and then the overheads. Now, how this overhead 3,000 is here? So we need to see how the rate is calculated first of all. If you go to my working number 1, the working number 1 is basically you got 16,500 total overheads. And the rate, he said, use on labor wage basis, or direct labor wage percentage basis. So if you divide the estimated overhead, that is 16,500, with the total direct labor wages, which is 22,000, and work out in a percentage, so it comes to 75%. So this rate is basically going to be used for allocating these 16,500 over these 3 processes. So in case of process 1, the direct wage is 4,000. So on that basis, the overhead for department 1 is 75% of 4,000, which is 3,000. And total cost is 22,700. लेकिन देखिए टोटल में लिखा हुआ है 23,200. उसकी रीज़न ये है कि there is an abnormal gain in this process. I will just tell you what is the abnormal gain. Now look on the output side. The output side is that process 2 you are sending 9,200. And normal loss suggesting 10% of input. 10% of input comes to 1,000. So in case of 9,200 and plus 1,000, that comes to 10,200. In generally, it is not possible that you put 10,000 and you can arrive at 10,200. It's highly impossible. Now the question is, in process costing, we work out an abnormal gain. Basically, this abnormal gain is simply the difference between input, and if output is exceed from the input, the difference is called abnormal gain. Gain cannot be normal. It is always abnormal. Now the question here is, how come the gain is there? In fact, your actual normal loss is not 1,000, but it is 8,000. But for costing purposes, normal loss is going to be taken as 1,000 and abnormal gain is taken to the other side. It goes to the credit of the process manager, department manager of that process, because he was allowed to have a loss of 1,000 units, but his efficiency is that he has not, he has saved 200. So that efficiency will go when you report it as a abnormal gain. So when it comes to the costing, that how much is the cost per unit, so look here, that calculation is, again, you have to see the working. It's very simple, that the total cost without taking the abnormal gain, as I said, it is 22,700. But remember one thing, if there is any recovery of normal loss, that will be reduced from the total cost. So we got the actual cost, that is 22,700, and there is a recovery of those normal loss of 200. So the difference and divided by the normal output. Normal output is 10,000 minus 1,900. So if you look into the working, per unit cost comes to 2.5. I repeat it again, 22,700 is the total cost. And out of that total cost, you take out the recovery of normal loss, that is 200. So balance is 22,500. And if you divide this 22,500 by 9,000, that comes to 2.5. Again, try to understand, please, 10,000 is the input and normal loss is 1,000. So the net normal output should be 9,000, but we had 9,200. So that goes to the credit of the process department, that they have saved 9,200 loss. Now, coming to the costing, 9,200 multiplied by 2.5, that comes to 23,000. And on the other side, the gain. Whenever there is a gain, we debit the process account and credit the abnormal gain account. And if you look into, there is an abnormal gain account, there is a credit of process 1, 200 units at the rate of 2.5, and this is 500. So we debit process account with the abnormal gain and we credit the abnormal gain account. Similarly, when we work it out, process 2, just see we are getting from process 1 9,200 units at the rate of 2.5, and total come to the 23,000. Then we add another basic raw material, then we have to add direct wages, then we have allocate factory overheads, direct expenses and factory overhead. Again, factory overhead, do remember, it is 75% of direct wage. If direct wage is 6,000, 75% comes to 4,500. Now, so when we transferring from process 2 to process 3, the output is 8,700. Now, if you look, the normal loss percentage is 5%. So if you take 5% of 9,200, it comes to 460. Now, 9,200 and 8,700 and 4,060, there is a difference of 40, and that difference of 40 is abnormal loss. Because in this case, your loss is greater than what was estimated. The estimate was 460, but your loss is basically of 500. So this is abnormal loss. Now coming to the costing of it, total cost in process 2 is 43,930, और इसमें आप देखें कि जो नॉर्मल लॉस की रिकवरी है वो 230 है, यानी 460 को 50 पैसे से ज़रब दिया तो 230 बनती है. जो डिफरेंस आएगा वो है 43,700. अब 43,700 को आपने डिवाइड करना नॉर्मल आउटपुट से. नॉर्मल आउटपुट क्या बनेगी? 9,200 से आप 460 माइनस करेंगे तो ये बनती 8,740. तो अगर आप कॉस्ट को यानी 43,700 को डिवाइड करते हैं नॉर्मल आउटपुट से 8,740 से, तो आपकी कॉस्ट पर यूनिट बनेगी 5 रुपये. तो ये 5 रुपये आप जब प्रोसेस 2 से शिफ्ट करेंगे प्रोसेस 3 में 8,700 यूनिट्स, तो ये 5 रुपये के हिसाब से शिफ्ट हो जाएंगे. और जो आपका एबनॉर्मल लॉस है वो भी एबनॉर्मल लॉस के अकाउंट में. देखिए पहले प्रोसेस में गेन हुआ था, इस प्रोसेस में लॉस हुआ है, तो एबनॉर्मल लॉस का अकाउंट सेपरेट बनेगा. प्रोसेस 2 में आप क्रेडिट कर रहे हैं और एबनॉर्मल लॉस को आप डेबिट कर रहे हैं. अब यहाँ से ये कॉस्ट ऑफ अकाउंट फॉर हो जाती है. सिमिलरली अब व्हेन यू गो टू प्रोसेस 3, आप लेंगे प्रोसेस 2 की जो आउटपुट है विच इज़ 8,700, और उसमें जो कॉस्ट आई है पर यूनिट विच इज़ 5. तो again the cost is there 43,500. Again you add the raw material, you add direct wages, you have direct expenses, and again you have the factory overhead. Do you remember, again in factory overhead you take 75% of your labor cost, and the labor cost is 12,000 and 75% comes to 9,000. Now the input was 8,700 and the output is 7,900. Now again in this process 3, if you look, 10% of input is the normal loss, and that 10% of input 870. So the output column 7,900, 870 comes to 8,770, while the input is 8,700. So again, credit side is greater than the debit side. So there is again an abnormal gain of 70. Now the costing, the total cost, again excluding the abnormal gain, if you look, it comes to the 71,340. तो अब देखना ये है कि नॉर्मल गेन आ गया है तो कॉस्टिंग कैसे करना है. तो कॉस्टिंग के लिए आप देखें जो टोटल कॉस्ट आपकी आती है प्रोसेस 3 में विदाउट टेकिंग इनटू अकाउंट द एबनॉर्मल गेन, दैट कम्स टू 70,540 आफ्टर टेकिंग आउट द सेल ऑफ नॉर्मल लॉस. So if you divide normal cost on the normal output, and normal output is how 8,700 minus 870, that is 7,830. So the cost comes to 9 rupee a unit. So see, in process 1 the cost was just 2 rupees 50 paisa. In process 2 it goes for 5 rupees. In process 3 it goes to 9 rupee. And now simply multiplication is that you multiply by 7,900 with 9, that is the cost of your finished goods from process 3. And abnormal gain, again you credit in an abnormal gain account 70 units, 9 rupee a unit, 630. Now we have to reconcile the input and output. Input in the basic we have 10,000 units, and finally the output is 7,900 units. Now the question is where those 2,100 units have gone. Now if you add on the 3 normal losses figures, it comes to process 1, 1,000, in process 2 it is 460, and in process 3 it is 870. If you look into the gain side, 70 plus 200, 270. So if you deduct 270 out of the total normal loss, that is your actual loss. And that actual loss is your 2,100. Because if you add 3 normal losses, 1,000 of A, and then 460 of process 2 and 870 of process 3, if you add together and deduct this 270, that comes to 2,100. So we need to reconcile these losses. हमने देखा कि पिछले प्रोसेस में कोई ओपनिंग क्लोजिंग वर्क इन प्रोसेस नहीं था. इस केस में नाउ अगर वर्क इन प्रोसेस बच जाता है, यानी इनफिनिश अनकम्प्लीटेड गुड्स रहती हैं, तो उनकी कॉस्टिंग कैसे की जाएगी. इसके लिए आपको थोड़ी सी एक्स्ट्रा एफर्ट्स करनी पड़ती हैं कि एस्टिमेट्स लगाना पड़ता है कि कैसे कितना परसेंटेज हमारा प्रोसेस जो है वो कंप्लीट हो चुका है और कितना अनकम्प्लीटेड है. तो इसके लिए मैं आपको एक इलस्ट्रेशन ही समझाता हूँ ताकि क्लियर हो जाए कि वर्क इन प्रोसेस की कॉस्टिंग कैसे की जाएगी. इसमें एक मैन्युफैक्चरर है जो प्रोसेस कॉस्टिंग को यूज़ करता है और उसकी टोटल प्रोडक्शन कॉस्ट और यूनिट कॉस्ट ऑफ प्रोडक्शन आपने निकालनी है. ड्यूरिंग ए सर्टन मंथ it started 15,000 units in production of department A. Now 1,000 units were lost in the process, and that is a normal loss. 10,000 units were transferred to department B, and 4,000 is still in process. It is still in the stage of completion. Now in process inventory at the end of the month, which were 100% complete so far material is concerned, it means that you're not supposed to add more material when it goes to the next month. Then labor and overhead, it is 50% complete. It simply means that if the total amount of labor and overhead you incurred, and if you have to complete the total output, let's say you started with 100 units and it is 50% complete, so it means whatever you spent up till now, only the 50 units would have been completed. 100 is incomplete, but the amount of money you spent on labor and overheads, that is 50% complete. So 50 units should be, yani 500 units should be complete if it is 1,000 in process. So in this particular question, the cost incurred is material 42,000, labor 15,000, and factory overheads 24,000. So here the illustration is slightly simpler because we need to stress on the work in process, not the process account itself. So if you produce a cost of production report in this case, so first of all, you have to work out a sheet called cost of production report, that input and output. Input is 15,000, and in output is process 2 transferred is 10,000, normal loss is 1,000, and closing work in process is 4,000. Now these are input-output reconciliation. Sometimes we call it a quantity schedule, and then we have to work out the equivalent production units. Now this is a new term, equivalent production unit. So for 10,000 is concerned, it is fully completed. And 1,000 is a normal loss. About normal loss, do remember, it is a part of production cost, so we don't separate it, we keep it, it is part of the normal, it is part of the production cost. So that's why in equivalent production, it is not considered, it's 0, 0, 0. But in case if it is a normal loss, then we have to consider it also. Then we have total equivalent units. Closing work in process material is concerned, 100% complete. He said 100% complete. So it is 100% of 4,000 is 4,000. And in labor and overhead, it is 50% complete. So 50% of 4,000 is 2,000 and 2,000. So the equivalent production in case of material, it is 15,000. In case of labor, 12,000. And in case of overhead, it is 12,000. Now, when you go to the costing, Do remember there is a column also, total cost. That is, material cost is 42,000, labor cost is 15,000, and overhead cost is 24,000. Total comes to 81,000. Now, for the sake of working the unit cost, do remember it's an average unit cost. Now, the total cost divided by the equivalent production units. In case of a material, 42,000 divided by 14,000, it comes to 3 rupee a unit. And in case of labor, it is 15,000 divided by 12, it comes to 1.25. And in case of overhead, it is 24,000 divided by 12, this is 2. And the total cost per unit completed is 6.25. Now we need to account for this total cost, which comes to 81,000. How much is transferred out and how much is the closing work in process? Now we have transferred 10,000 units. So if you multiply, say 10,000 by 6.25, it comes to 62,500. And so for work in process is concerned, in case of a material, if it is 4,000 units, 3 rupee a unit, it comes to 12,000. And in case of labor, it is 2,000 multiplied by 1.25, it comes to 2,500. And in case of overhead also, it is 2,000 units, and 2 rupee a unit is 4,000. So this is how the total cost of 81,000 is accounted for. Simply, we transferred 62,500 to the next department, and the normal loss is 1,000, the quantity. But so far, closing work in process is concerned, it is 4,000 units, and the costing is 80,500. So if you add on the total cost in process 1, it is 81,000, 15,000 units input, and 81,000. And so far cost is concerned, when outgoing, it is 10,000 to B, and 4,000 units still in process, which is 8,500. So this is how the process losses and the closing work in process cost is accounted for. Now, if you go a slightly difficult exercise, when we have abnormal losses also, then how the costing is going to be done? Because whenever there is abnormal loss, there is always a problem. Now, in this case, I can give you another illustration regarding the process costing, that is where there is a normal loss, where there is an abnormal loss, and when there is a closing work in process. Now, there is another company called Burke Soap Company. They produce a detergent which requires processing in 4 departments. The following information is relating to the department number 1. Unit put into process are 60,000, and unit transferred to next department, that is department 2, 54,000. Now the difference of 6,000 accounted for as it is. Unit still in process, that is of 4,000, and they are 90% complete so far material is concerned, and 60% complete so far labor and overhead is concerned. Now try to understand here, 90% material complete means when it goes to the next period, you have to add another 10% material to complete these units. And so far labor and overhead is concerned, it is 60% complete. Then when it goes to next period, then we have to add on 40% material, 40% labor and 40% factory overhead on these units. Now the unit loss in process normal is 1,200. Now if you try to add on 54,000, 4,000 and 1,200, it doesn't tie up with the 60,000. So there is a difference, and that difference is your abnormal loss. Now look here, the cost incurred during this, in this department, is material 87,600, labor 28,600, and factory overhead 45,760. Now if you work out that what is the total cost, you add on these 3, and then we goes to the process account. And again, the idea here is that you need to produce a quantity schedule, you have to account for input and output, and then you work out the equivalent unit. And in this case, equivalent unit, you have the transfer to the next department, normal loss, abnormal loss, and closing work in process, and then the costing of it. Let's see the illustration. Input is straight away 60,000 units. I haven't taken the opening work in process in these illustrations, because if there is an opening work in process, so you had first opening work in process and then add 60,000, so total will be the input. Now in this case, we have only starting the department 1, and they don't have the opening work in process. Now the output transfer from process 1 to process 2 is 54,000 units, and normal loss which is given. You know, in the last previous questions, the normal loss percentage was given. In this case, straight away they said that this should be the normal loss, and it comes to 5%. If you look in 60,000, 5% of that is 1,200. Now, closing work in process is 4,000. So the difference of 800 is abnormal loss. It is nowhere mentioned that there is an abnormal loss, but we need to account for in a quantity schedule that how much the input was and how much is output accounted for up till now. The difference is always abnormal loss. Now, regarding abnormal loss, at what stage the loss is resulted, that is very important. Now, if the question is not suggesting anything, so we assume the abnormal loss result at the final stage. Final stage means when you are inspecting, inspection stage. So in this case, transfer to department 2 is 54, normal loss is 1,200, and abnormal loss is 800, and closing work in process is 4,000. Now, if you work out the equivalent production unit, so for material is concerned, now do remember those who are transferred out from one process to another process, it is for all three cost element wise, it should be 100% complete. Material, labor, overhead, 54,000, 54,000, 54,000. And as I said earlier, normal loss is not accounted for. It should be just in input. It should not be spread over to those three cost elements. Abnormal loss, of course. Now, so far material is concerned, I assumed that this loss result at the end of the process when the units are completed, inspection stage. So that's why it is 800, 800, 800 in all three cost elements. But in case he said abnormal loss is resulted during the process, say 50% complete or 60% complete, then only we should take 60% or 50% as the case may be in the equivalent production units. Work in process, material wise, it was 90% complete. So 4,000, 90% of that, 3,600. Labor and overhead, 60% complete. 4,000, 60% comes to 2,400 and 2,400. You add on material, labor, overhead, and the equivalent units are 57,200 and then 57,200. Now, sometime they put together labor and overhead and they call it conversion cost. So in that case, there is only two cost elements, that is the material cost and the conversion cost. Now, we have added the cost in department number 1, material 87,600, labor 28,600, and overhead is 45,760. Now the total comes to 161,960. So the per unit cost will be again cost added divided by the equivalent unit. And in case of material, it comes to 1.5 rupees per unit. And in case of labor, it is 50 paisa. And in case of overhead, it is 80 paisa. So total cost per unit completed is 2.8. Now from here, we have to account for this total cost. We have added 161,960 where it has gone. Transferred out to process 2, it is simple multiplication that the unit 54,000 and the unit cost is 150. You simply multiply, it comes to 81,000. Similarly, in case of labor, the goods transferred out 50 paisa per unit and 54,000 units, so it is 27,000. Again 80 paisa per unit and the units are 54, so it comes to 43,200. You add on, it comes to 151,200. Now, if you simply multiply 54,000 units by 2.8 per unit, average cost per unit, so again you will get the same figure, 151,200. Then the normal loss is not considered. Now please try to understand another thing. If this normal loss have any recovery, because in the first illustration, you recall, we have the recovery also from normal losses. So in case there is recovery of normal loss, so that should be deducted first out of the total material cost and then work out the unit cost. So if there is no recovery, then straight away you take the cost and divide it by the equivalent unit and you get the unit cost. So abnormal loss is concerned, again unit you take from the equivalent unit and multiply by the unit cost per unit. So you will have material cost 3,600 unit multiplied by 1.5, it is 5,400. In case of a labor, it is 2,400 multiplied by 0.5, and in case of overhead, it is 2,400 multiplied by 8, and that goes to 2,240. And if you see the work in process figure, it comes to 3,600 and multiply by 1.5, it goes to 5,400, and then 2,400 multiplied by 5, it is 1,200, and if it is 2,400 multiplied by 80 paisa, so it comes to 1920. So total is 8,520. And if you add on all these three columns, the total comes to 161,960. So in any case, input and output column of each process is to be reconciled not only from the unit points of view, but also the cost point of view. Now we have already discussed job order costing and process costing, and now the third cost method is the operating costing. Now operating costing is generally used in service-oriented organization, namely transport companies, airways companies, railways, shipping companies, electricity companies, hospitals, cinemas, canteens, hotels, schools and universities, local authorities, and so on. So these are the various service rendering industries, and there we have to find out how the cost is going to be calculated so far the service industries are concerned. So first of all, let us see what are the characteristics of these operating costing system, or rather the service industry system. Characteristics of operating costing is unique services, because each business is rendering a different type of services. Similarly, large proportion invested in fixed assets and comparatively less working capital is required, but not necessarily in all cases. For example, in airline companies, the fixed assets are very, very huge, but there are certain services like lawyers, accountants, where they don't have a large amount of fixed assets. They can just survive with some computers and so on. Then distinction between fixed cost and variable cost important, because economies and scale of operation affects the cost per unit of service industries also. The selection of suitable cost unit. Unit of service may sometimes prove difficult. The cost units may be of the following two types: simple cost unit or composite cost unit. The cost unit is like in a single cost unit, or simple cost unit is unit like number of units, or number of machine hours, number of labor hours, or maybe per chair, per table, and per meal, per students, and so on. They are the simple one. But in case of like transportation, we may have a composite cost unit like per kilometer, per mile, per kilometer, per ton, per passenger, per kilometer, and so on. So there is a problem in case of unit of service cost industries. Let me just give you certain examples about the service industries where the cost units are slightly difficult. For example, in a law companies where they render services to their clients, it's very, very difficult that how they prepare a certain case and how many people are involved to prepare a certain case. So how the cost unit will be worked out. But similarly, they have the department where they do certain research, and in research cases, they find out the various cases decided earlier, and then there is a case preparation. Those are also, again, they prepare the case, keeping in mind what are the problems and how the case is going to be handled. Then there are some attorney who goes to the court and then plead the case and then decide. So question here is how they are going to cost all these services, because there is a difficulty, but still somehow we have to work it out. Similarly, in an audit firm or a accounting firm, there are different clients, small clients and big clients. They ask for accounting, bookkeeping, etc. They ask for just services, management services, and so on, tax services. So for each type of service rendered, which type of cost unit is going to be used, it is slightly difficult, but somehow we will find out how the cost unit is going to be worked out. Coming to the transport costing objects, fixed carriage rates, goods or passengers, deciding the hire charges of vehicle, what should be charged against the department's cost of own motor vehicles versus alternate form of transport, maintenance cost of one vehicle versus others, and so on. So we have to find out how the transport cost objective is. Then determination of number of cost units. If we look into a small illustration, first, flight transport company runs 4 lorries between 2 towns which are 50 kilometers apart. The seating capacity of each bus is 50 passenger, and actual passenger carried are 80% of seating capacity. All the 4 buses run for 25 days in a month, and each bus makes 1 round trip per day. Maybe say from here they start from, let's say, Lahore, and they go to Multan or maybe Islamabad, and they just do one trip a day. We need to find out, first of all, the cost unit of this transport industry. Passenger kilometers. So look here, number of lorries are 4. Distance travel is 50 kilometers. Capacity of lorry is 50 passenger, and actual capacity utilized is 80%. And there is a round trip. Round trip means you go and come back. And number of days operate 25 days a month. Then if you multiply all these figures, you come up with 400,000 passenger kilometer, which means that composite unit is 400,000 passenger kilometers. Total cost, let's say, if per month, say 1.6 million. So if you divide it by 400,000, the cost per passenger per kilometer is going to be 4 rupees, which means if you carry one person for 1 kilometer, it costs to the company 4 rupees. And if, let's say, we charge total revenue for that month 2.4 million, and if we divide it by 400,000, it comes to 6 rupee per passenger per kilometer. Simply means कि अगर हम एक पैसेंजर को 1 किलोमीटर लेके चलते हैं तो हम उससे 6 रुपये चार्ज करते हैं, और उसकी जो हमें कॉस्ट पड़ती है वो 4 रुपये पड़ती है. इस तरह हमें एक पैसेंजर को 1 किलोमीटर ले जाने के बाद सिर्फ 2 रुपये का प्रॉफिट होता है. Now, compilation of cost in case of an operating costing. Costs are classified and accumulated under the following headings. Some are standing charge. We call them standing because they are there. They are the fixed charge. They are not going to change whether you travel or whether you don't travel, whether you running the vehicle or you don't run the vehicles. Like garage rent, license fees and taxes, insurance, driver's wages, you have the depreciation, administrative cost, interest on capital. They are all standing charges. They are not going to change whether you run a truck or lorry. It's going to be the same. Then there are some standing charges. If you look into it, these are constant costs and are incurred irrespective of basis of mileage. Such costs, therefore, should not be allocated to specific journey on the basis of mileage. Some of these costs are direct, are traceable, fixed cost, and can be allocated to the specific vehicle. Other such costs are suitable, apportioned to each vehicle. Then opinions differ as to whether the depreciation is to be regarded as a fixed cost or a variable cost. It is thus sometimes regarded as a variable or running cost, and sometimes it is fixed cost. So as I said earlier, it is slightly become difficult in service costing or operating costing that how certain cost can be separated into fixed and variable. So in this case, you can see the depreciation cost. If, let's say, if you are not running a vehicle, so it stands still, so there won't be any depreciation of tires and tubes and etc. But so far, the cost or depreciation of time-wise is going to be reduced. Then interest on capital might also be in a fixed charge. Interest on capital simply means that when you buy a vehicle, you end up to pay a lot of money, and you borrow the money to buy that vehicle, and you pay the interest on that. Then again question arises, how this interest is going to be allocated. So we assume it is just a fixed cost, and we put it together, all fixed cost. इकट्ठा करने के बाद फिर हम एक रेट निकालते हैं कि हमारा स्टैंडिंग चार्ज क्या बनता है पर माइल या पर पैसेंजर. Second part of the cost is the running cost or variable cost, like petrol, diesel oil, lubricating oil, tires and tubes, repairs and maintenance, driver's wages, if they are being paid on trip-wise rather than on monthly-wise. These costs vary more or less in direct proportion to the mileage, and so a cost per unit may be computed. Wages of drivers, conductors and cleaners are sometimes regarded as running or variable cost if payment is according to the distance or trips. Sometimes they supposed to stay overnights, so those overnights allowances are separate, and they are also being fixed as per number of going to be variable in case if they stay 2 days, 3 days overstay. So in that case it is a separate cost, and that is your running cost. If we look into an illustration how the cost is being taken care in operating costing, so let me just give you an example. A vehicle costing 650,000 and its life is estimated to 5 years, after which its residual value is estimated to be 200,000. Residual value means the scrap value. After its life of 5 years, you have to sell it out and you will get 200,000. Standing charge per annum are estimated as follows. Now, these are the standing fixed charge for per annum. Insurance 65,000, licenses 13,000, administrative overhead 350,000. So for simplicity, मैंने इसको थोड़ा रखा है, आप इसमें और भी standing charges ऐड कर सकते हैं. Fuel cost is ₹4,000 per gallon and based on the estimated kilometer of 30,000 per year, the cost of lubricant is 12,000. So these are the variable cost or rather operating cost. The estimated consumption of fuel is 20 miles per gallon. A set of tire costs 26,000. Here set means all 4 tires. And their expected mileage is 10,000. The driver is paid 5,000 per week of 44 hours and is entitled to a fortnight paid holiday per annum, which means that if he works say 50 weeks, so he will be paid 52 weeks because 2 weeks holidays salary will also be paid to him. Now, it is estimated that the vehicle will run 250 days per annum and depreciation is regarded as a running cost. In this case, I assumed clearly that depreciation जो है वो आपकी running cost है, operating cost है, fixed cost नहीं है. Repairs over the life of vehicle are estimated to be 150,000. Again, this is for the whole life. Compute figures which may be used as a base of quote. Then we have to find out that if somebody asks us, okay, please give us this vehicle for 2 days, so how much we are going to charge. So we need to work out the quotation as well. And that customer is asking you that they are going to take your car for 100 miles and returns, no return load and total time 2 days. Just 2 days. वापसी पर वो आपके साथ नहीं आएंगे, सिर्फ आप लेके ही जाएंगे और 2 दिन के ट्रिप के लिए आप जाएंगे. So let's find out how the cost is going to be computed. Now the insurance cost is 65,000 and this is per annum. Similarly, licenses are of 13,000. Again, it is per year. Administrative overhead is 350,000 per year. And now, if you look into the direct wage, it is 52 weeks if you run. So you have to add another 2 weeks, 54 weeks. And 54 weeks and 5,000 per week, if you multiply, 270,000. Similarly, other cost for 52 weeks, 1,000 per week. So it comes to 52,000. Total comes to 750,000. Now, this is the total standing cost. यानी ये fixed cost है जो पूरे साल की आपको पड़ेगी 7,50,000. और आप एक साल में जो mileage cover करते हैं वो है 30,000. So if we work it out, the standing charge per mile, per kilometer, it comes to 25 rupees. That is 750,000 divided by 30,000 kilometers. So rate is 25 per kilometer. This is a standing charge. That is, whether you run a business or not, you have to end up pay 750,000 per year. So seen in this case, they operated for 30,000 kilometer in a year. We estimate this is 30,000 in a year. So it comes to 25 rupee per kilometer. Now running charges per kilometer. Depreciation is 650,000 minus 200,000. That is the depreciable value, 450,000. And these are 5 years and each year you travel 30,000 hours. So it comes to 150,000 hours. So per kilometer, it comes to 3 rupees per kilometer. Similarly, fuel are 400 and it is 20 kilometer you travel in 400. So per kilometer, fuel cost is 20. Tires are 26,000 and after 10,000 kilometer you have to replace them. So it means that it comes to 2.6 per kilometer. Lubricant is 12,000 and it is 30,000 per annum. So it comes to 40 paisa per kilometer. Running cost per kilometer comes to 27. So if you take standing charge of 25 and running cost per kilometer of 27, so आपका जो total cost per kilometer आएगा वो है 52 rupees. It simply means if you are running a business of a car, then it means you are incurring 52 rupees per kilometer. Now, standing charge per kilometer, if you work it out, it comes to, because the client asks you that they want 2 days trip for 100 kilometer. So we have to charge him standing charge for 2 days. So per day, standing charge comes to 750,000 divided by 250 days per year. So it comes to 3,000. So we charge him for 2 days 6,000. Then running charge for 200 kilometers is 27 per kilometer. So we charge him 5,400 for the running charges. Then if you add on this total operating cost of journey, 11,400 rupees. Now we have to add a certain profit margin on it, because we can't just simply charge him the cost. So if, let's say, if you are taking 10% profit on your running, so you add 10% of 11,400, which comes to 1,140. So the quotation price will be 12,540 for 2 days trip for your client. Do remember, this is how the clients are going to be charged. You know, sometime in a lot of businesses going on currently, and you ask for transport facility. So the question is how the transporter is going to charge you for that particular day or for that particular trip. So this is how they work it out. So in service costing, we need to work out that कितना हमारा स्टैंडिंग चार्ज होगा और कितना हमारा ऑपरेटिंग कॉस्ट होगा. मसलन ये जो आजकल शादी हॉल्स हैं, ये एक तो आपसे चार्ज करते हैं जो रेंट पर डे डिपेंडिंग ऑन द कैपेसिटी ऑफ द हॉल, और फिर दूसरे वो आपसे फूड के लिए भी अलग से नेगोशिएट करते हैं कि पर हेड फूड कितनी आपसे चार्ज करेंगे. तो यूजुअली दिस इज टू वे इन सर्विस इंडस्ट्री, दैट यू charge for the fixed cost and you also charge for the running cost. This is how the service costing or rather operating costing works. So this is the end of our costing methods. So I can repeat that we discussed job costing, we discussed process costing, and now we have just concluded the operating costing. Now, although in job costing we have something like contract costing, batch costing as well, and in process costing, as I explained, that we need to go further. Rather than simply working out the cost of a process, we must consider that how the process can be a profit center, because we can't just leave the process manager to keep on incurring the cost. For the control purposes, we have to set that there is a standard cost which he is going to match with the actual cost, because transfer from one department to the other department is supposed to be on standard cost, not the total cost to be transferred. So, and in case of operating costing, as I just explained, that you need to work out how much is your standing charges, your fixed cost per annum, and then divide it by per day, by the number of days you work, or by the number of mileage you cover, and so on. Let me give you another example of operating costing. You know, in a canteen, for example, you are serving meals to your staff. So what is the total cost, standing and as well as operating cost? Add together and divide by the number of meals you served. So you can work it out per meal cost. Maybe say it comes to, let's say, 40 rupees. So you may be charging 50 rupees because you have to add certain amount of profit into it. So this is how the operating costing works.